Here from Eightcap. Welcome to Friday's update. So we're looking at the Canadian dollar to Swiss francs as the CAD Swissy. So it's a pretty simple one here. It's one I like to look at. It's probably a little bit late, but I thought I'd touch on this anyway. We can see that price has started to form a continuation, and that's after we've had a decent retracement back into the moving averages. We can see a break, stall down here is a bit of short-term support at this level here. We can see some rejection there after three tests lower that failed. We can see a nice strong bull bar that broke the previous high and closed above that previous high as well. And that was sort of the trigger bar, and now we're sort of seeing the confirmation bar coming into play. What we'd like to see a break is a break of yesterday's high and a close above that area. Could signal to us that we have a new continuation in play here, and then we'll look to see if this trend can continue. So we can see it is a trend, and we can see this mark in the break here of the downtrend. We had that nice breakout. We had a pullback, nice higher low, another rally up, another higher low, another rally through the last high, forming a new higher high here, and then we had a new higher high, a new higher low, and now what we'd like to see is a new higher high with a break of this level here. If we do get that, then this is well and truly confirmed, and we'll look for this trend to continue on, and then we'll see if we can, if these things do continue to pan out for us, we'll look to see if we can see tested this previous high here. So pretty of a quick one today, and really just an example of it. You can call it, sort of after the fact if you want to. But how I'd look to trade this is after seeing this pullback, I'd look to trade after the market came back, into this area inside the moving averages or hitting this slower moving average and then forming a retracement and then breaking that previous high. You could have your buy stop at this level here. You could also have a buy stop at this level here. There is a bit of resistance here, but look, if the market did pull back, you'd have your stop loss here to exit the position, and then you'd just see if you can get a run up to test and break this high, and then after you got to that point, you could either move your stop and close 50% of the trade or one third of the trade, and then move to break even to see if you've got an extension run higher. So these are some of the things you can do. Generally, if you are going, in terms of risk management, the general consensus is you should never risk more than 1% of your total account value per position. That's stop loss position. So that's 1%. Of your account value per stop loss. That's generally what people do adhere to. Some people do like to make it a little bit, more aggressive up into the, that 3 to 5%. Everyone's different. It really comes down to your personal risk preference, your risk profile, and your risk management plan that you have inside your trading plan. So there you go, guys. Sort of this bit of a breakdown of this position here. So there is still an idea to potentially buy if it does break that high here. Could have that early move as well and the break of this one here. So we'll see how this goes. If we do get a continuation higher, we'll look to see if we can break this high first, and then we'll see if we can get a test there if that does happen. If we do see a pullback and a close back in this area, that's a big worry. A break of that low is basically more than a worry. It probably cancels it out, and then there's also the risk that this resistance is going to feed further selling if there's a failure, and we could even see a move back to maybe even test that trend line. So that's an alternative scenario, but for now we'll continue to concentrate on the bullish price action that we are watching at this point in time. So thank you very much for your time. We wish you all the best for your weekend. Have a fantastic break over the weekend, and catch you all next week. Thanks and bye for now.